Hey guys, Boris Johnson, Forex. Welcome to the weekly technicals for July 28th to August 2nd, 2019. It's FOMC week, it's NFP week for euro dollar, dollar yen, and pound dollar. It's really dollar showdown as we get to find out exactly how much the Fed is going to cut this week. So, dollar really rallied at the end of the week, and euro came down to a very, very key support level. As a matter of fact, I think it made lows for the year this year, but still held above the 111. 111 looks very vulnerable. We'll take a look at the charts in just a second. But if that goes, then we're going to start testing the very, very key, really big 110 level in the euro. Dollar yen, on the other hand, looks relatively well bid. We crossed the 108.50, and now it's just at 109 resist. If Fed cuts less than the market thinks, I think we have a reasonable chance here to take out the 9s and then really make a big move towards the 10s, which we haven't seen in quite a long time. And the loser of the week was clearly cable. Cable is suffering some very serious declines as Boris Johnson takes the reins and the market loses all confidence in the fact that there's going to be some kind of a negotiated solution. We broke the 24s. We're now literally at the fat finger lows of 23.70s. And I think if that goes, we could be looking at 120 by September if the market feels that Brexit is really going to become an inevitable possibility. So we'll see how that plays out. But for now, cable really looking very, very weak, and I wouldn't want to get in front of that train just yet. On the calendar this week, it's really Fed and NFPs. Those are the two big events that everybody's going to be watching. On the European side, we start with the CPI, consumer confidence, all sort of second-tier data. On Monday, we do have the BOJ, which also is in many ways second-tier because the BOJ itself is not going to change policy. It's going to remain essentially the same way. Rate decisions are out of BOJ have been essentially the same way for years. Into the U.S. before the big events, we have personal income, personal spending. That should be an interesting look because we'll see just how strong the consumer has been. There have been some interesting signals. The consumer is actually doing relatively well. Retail sales were a little bit better, and this week we also had a really strong beat by Starbucks, and that's hardly representative of the whole U.S. retail sector, but Starbucks is kind of a very, very good proxy for that top 20% of the consumers that are primarily the hugest buyers of consumer goods in the U.S. economy. So we'll see if personal income, personal spending expanded, and that should be still more positive fuel for the dollar as we go forward. We have pending home sales. Housing has been a disaster, so it's really hard to handicap that, although Kathy is mildly bullish that number. And then into Wednesday, of course, European GDP, where we're bearish euro because we've had some significant weakness all across the board, especially in Germany. And then in the morning, we have the ADP numbers out of ADP, of course. And that should be an interesting look because the employment data looks relatively steady, and that should also be supportive of the dollar. And then, of course, FOMC. The conventional view, market view, is 25 basis point cut. I think that if that comes in that way without any kind of significantly dovish guidance going forward, that should be relatively dollar positive. We're going to probably take out 109s, maybe even higher, especially if the Fed says this is not a start of something significant, but perhaps a one and done as they observe, sort of like a 25 BP and then another 6 months pause. That would be uber a dollar bullish, and really could take us to fresh highs for the week. Then as we move over, we get into the BOE statement, and that should be actually very bearish because the thing with BOE is of course that they're going to be even more sensitive now with Bojo's election of Brexit fears, and they're going to be very, very liquid, and I doubt they're going to sound hawkish at all. So we'll see how that plays out, but I think cable, it's going to be interesting if the Fed comes in hawkish, BOE comes in dovish. We could see cable 122 before the end of the week. And then, of course, into Friday, the major event on the micro calendar, the U.S. non-farm payrolls. Market looking for about 153 against 191, so a small move down, but nothing significant. We'll see if unless that comes in monstrously weak, sort of like underneath 100,000, and creates all sorts of impetus for the Fed to continue cutting rates, that should be a relatively neutral event as we go into the week. So that's pretty much it. It's really the Wednesday focus first, and then sort of a post decision confirmation or rejection of the Fed move that will really be driving a dollar one way or the other. Now, looking at the charts, let's start with the euro here. And the euro looks super vulnerable here because we're talking about the fact that we tested the yearly lows here. You see this 111 line? That is a Maginot line. It's a key line to break. If we take that out, if I zoom out, you get nothing. You really have no lows here at 110 until, where is this? This is still, well, sorry, this is the 110 level, right? So really until like this 2 years ago, until we see the Macron gap unfilled. And that gap, by the way, is what, 108? So it's not inconceivable that if we have sort of a dollar strength move into the end of this quarter, we could possibly, and then further European deterioration, we could see this gap filled. But for now, I think the most important thing, most immediate focus is, of course, this 111 level, which breaks, then puts us straight on the path towards the 110, very big round number figure. Cable also looks really horrible. More importantly, it looks very vulnerable because this is the fat finger lows. We bounced back really hard off the fat finger lows, haven't been here in a while. We tested that about a week and a half ago, bounced hard off of that, and now this is going to be, I think, a very interesting look. If Monday we can't rally off this thing, I think we have a very, very strong chance here if the selling accelerates to go to 2,300 because there's a tremendous amount of stops here. They're going to give way if the market decides that it wants to test these levels. That's a big, significant level. It got bounced off once, bounced off twice. The third time could be the charm to the downside for the shorts. So watching that very, very carefully. So in front of the week, to me, cable weakness is a big story. And then finally, here's dollar yen. Dollar yen looks relatively bullish, still underneath the 500 SMA, above the 20, still underneath the 500 SMA, still really capped at this 109. So it's not a full runaway train, but definitely looks good. And a nice big W pattern here, W bottoming pattern, which is very bullish technically. It would have been better if we closed on the highs. We didn't quite close on the highs today, but overall the price action still looks relatively supportive, although you do have to be very, very cognizant of this 109 and resist. It needs to bust through it. I have a feeling they're probably going to bust through it before the FOMC, but need to watch that very, very carefully because if they do bust through it before the FOMC and then FOMC comes in and essentially says 25 and hold, that provides the full impetus to run towards the 110s and really stops people out like a locomotive. And then finally, I just kind of wanted to throw this in because I thought that was interesting. Dollar Swiss is usually a very, very good proxy for the dollar index. And what you're seeing in dollar Swiss right now is, first of all, we're above all the moving averages, the long term and the short term. It's very, very bullish. We have a higher low, and we're literally right here at this 99.50. We take that out, it puts us square on path towards parity. That's a sort of a strong vote of confidence in a dollar relative to everything, but certainly against the Swiss franc, and definitely worth watching front of the week because that's going to be a good signal to us whether the dollar strength is going to continue as the week progresses. So that's how everything shapes up. Wish you guys the best luck, the best trading. Boris Johnson, over and out.